here I am trading MYM, which is a micro YM. YM is the Dow Futures. And one of my YouTube subscribers asked about washing trades, which I interpret to mean any trade that's going in against your direction. You can average and hedge to correct the trade or to turn a losing trade into a winning trade. Against your direction, you can average and hedge to correct the trade or to turn a losing trade into a winning trade, or at least a break-even trade. So I am cleaning my computer up here so it's a little quicker. Apologize for the late start here. It's 8:48 Central Time. I'm here in Central. I am in Central Time. I'm in Corpus Christi, Texas. Lovely Corpus Christi near the beach. Sometimes I do this on the beach, so that's the nice thing about trading. You can do it anywhere, as long as you have an internet connection. Anyway, I'm using MYM because the margin is so low that almost anybody can do it. As long as I'm using interactive brokers, as long as you have $2,000 in your account, which is the minimum for commodities trading, then you can do this. Let me see, the margin is, pulling it up on my other screen, is, come on, $368. $368 is the margin. So like I said, as long as you have $2,000 in your account, you can do this. I actually went short here at 26,162. I did that on purpose to try to do a averaging trade. I thought it would bounce back up here and then go down, but it didn't. Normally I don't do a short when it's right on the 8 moving average. Let me get rid of that. Let me go ahead and do it as a normal trade. I normally put a sell stop or a buy stop in there. I would move it to that bar. Actually, now we're on this bar, so I'm going to move it up down to here. As you can see, the MYM, you don't make a lot of money on one contract. I'm just using one contract. What are we down to? 124, 160. So that's 36 points, and so it's a half a point. So I'm up $16. But the margin, I mean not the margin, the commission is very low. It's $68. $368 is the margin. So like I said, as long as you have $2,000 in your account, you can do this. I actually went short here at 26,162. I did that on purpose to try to do a averaging trade. I thought it would bounce back up here and then go down, but it didn't. Normally I don't do a short when it's right on the 8 moving average. Let me get rid of that. Let me go ahead and do it as a normal trade. I normally put a sell stop or a buy stop in there. I would move it to that bar. Actually, now we're on this bar, so I'm going to move it up down to here. As you can see, the MYM, you don't make a lot of money on one contract. I'm just using one contract. What are we down to? 124, 160. So that's 36 points, and so it's a half a point. So I'm up $16. But the margin, I mean not the margin, the commission is very low as well. So it's like 1/5 a normal YM contract. Let me see. No, that's not right. It's a half a point, and YM it's 1/10 of a normal YM contract. So the margin on YM would be what did I say, $360. So it's $3,600 for a YM contract. So if you don't have enough to do at least 2 contracts, then I would do MYM. That way you can do multiple contracts, and you can do hedging. Well, you can do hedging with the other, but you can do, no, you can't, because there's no direct trade for YM, and you can do S&P trade. I just got stopped out, by the way. Or you could do a different month, I'm doing the June month, which is expires June 21st. This is June 10th. Anyway, this MYM is new, and at least new to Interactive Brokers, which is the brokerage I'm using. So that makes sense. I got stopped out, came back up to the 8. I'll give you a little bit of an example of how I trade and how you should trade. A little technical example there. Using Fibonacci scale, it came up to the 38.2. Did that wrong. Go from down to up. Came up 38.2 retracement from the downtrend. And hit that and went back down. So actually I moved my stop down too low. I didn't pay attention to what I was doing because I was talking. Here, let me do an example of. Okay, so if I put a buy order in there, and it should come down lower, and then I can average my price by buying again and watching it go back up. Of course, it's going to go in my favor. So I can't use that as an example. Let me see. It broke the 200 moving average. I got my purple as 50 moving average. Just give you a little background while we're waiting here. I switch back and forth between a 1 minute and a 2 minute on my main board here. This is 2 minute time frame. I also watch 5 minute. That's what this is, and the 15 minute candles. So I watch all three. Unfortunately, like I said, I do switch back and forth depending on how quickly it's moving between 1 minute and 2 minute. Early in the morning, which, like I said, this is 8:55, 55 minutes, or no, 35 minutes, 25 minutes after the open. Oh, there we go. So now we are at a loss. I'm unrealized is $1 loss. Oh, I didn't get to average before it went back up. Now it's back up above my buy point, and I'm about break even, $1 in profit. My stochastics are low, starting to point back up. So I do think this is a good trade. However, I thought that I was getting in a little early. Normally I would wait for the candles to point back up. Before I got in on the down move. Some people call that trying to catch a falling knife, and I guess I caught it. It did go down further. I just didn't catch that one quick move. It didn't hit the earlier candle, but it did get this one, 26,123. So I could have put a buy in there. All right, so this is another positive trade. And the reason I'm doing this, somebody said on the last video I made, all my trades were positive, and I didn't. I think I had 8 positive trades, and none of them were actual losing trades, so I didn't get a chance to fix a trade. So they asked, how would you fix a trade? Now, there are some trades you don't want to fix. You do want to have stops. And actually, I'm getting a little sloppy here. I'm not even putting stops in the right way, but and sometimes I won't, because as everybody knows, market makers will see your stops, and sometimes they will open up the spread or just move the market to stop people out. That's probably what this candle is. That's at the open. It's going both ways to stop people out. And so you don't want to. You could play like I'm playing right now. I'm not showing my stops. My order's on the board, but it's not triggered, so they won't see it. But then you have to actually pull the trigger, which if you have a problem with pulling the trigger, then you might want to just go ahead and put the stop in there so you don't have to think about it later. That trend line was not correct. So I put trend lines through the bottoms to see when reversals are, see when it, this isn't moving that quickly, so I'm going to switch back to a 2-minute. I can see on my 5-minute it's the 8's above 20, 8 is the purple, 20 is the blue, is above my 50, is above my 200 down here. That's my stop, that red line, which is this red line. So the stop is shown on all 3 boards. So now I would move my stop up to here, so I'd have a pretty much break-even stop. If it comes back down, I'll just be get out of that trade. I will check to see where this retracement is going. For this down move, we're coming up to the 76.4 retracement, Fibonacci retracement. So it will have some resistance right there, although it will have some support at this uptrend line and at those moving averages. If it breaks through that, so I'm going to move my stop up. If it breaks through that 41 level, I probably won't. That'll probably be going back the other way. Again, we're early in the morning, 9 o'clock, so this will have up and down movement typically. We won't be trending until later. Let me see how I can get into a trade that I can use an example of averaging. One thing I could have done was, which is something I like to do, is use multiple contracts and then get out of one right away when it goes in your direction. That's something I learned in Market Wizards, where you do 3 contracts, get out of one when it goes your direction, and then set your stop. So if it goes against you, then you'll basically have a break-even trade because you've already taken some profit. So this is broke through the 76.4 Fibonacci, coming back up to the previous highs. I use this Bollinger Band as well. So I have several indicators on my chart, Bollinger Bands, moving averages, volume. I could tell how much buying or selling is on any one of these candles. MACD and stochastics. So yeah, so I have 7 rules of trading. Go over those real quick. Let me move this stop up while I'm at it. There's a big bar here, but I am going to move it up under. Clear that. Under the 50. 26,150 is an algorithm number, so I'm moving it up below that, and it's this uptrend line through the bottoms is acts as support. It did break through it, but it didn't break through the 8 and the 20. So, and my stop is below that 8 and 20. So I didn't look at any of these before getting into this trade because I was trying to use it as an example of averaging, and I wasn't going to show a hedge, but I was going to show an averaging to fix a trade. Here are my, up there I'm stopped out. 7 rules of trading. Trend lines are in my favor on the 2-minute and the 5-minute and the 15-minute. Moving averages are above or below. Like 8 is above 20, is above 50, then that means that it's going in my favor. Stochastics and MACD are in my favor. The Fibonacci retracement levels trend lines through the tops and bottoms, and reversal times. Didn't talk about that, but 9 o'clock is a reversal time. And then the last one is risk and reward. I want a 2-to-1, at least a 2-to-1 risk to reward. So if I'm risking $100, I want to make $200, or if I'm risking $10, I want to make $20. So see how small this is? It's only $16. Now, if I was using YM, I'd be up $160 for those two trades. But since I'm just using MYM, so let me. This is still looking to me like an uptrend. So what I would do is put in a buy, change my number to 3, update that. All right, I'm in 3. Here's an example of getting out of 1 at that resistance level right there. And set a stop. I don't know why that buy is still in there. Buy 2. Oh, it must only, even though I set it to buy 3, I only got filled with 1. That sometimes happens. Let me go the other way. All right, so this is starting to extend above the 8. So this is another trade. It's an extension trade. So let me see if I can average here. You can tell over here on this one if I'm in or out of profit. That P&L, unrealized P&L right there. Right now is $1. So for every point move in the Dow Futures, it's a 50 cent change. So it takes 2 points to make 1. But when I average here in a second, it will be 1-to-1. All right. Now I got an average price of $26,159, where it was $26,157. That was my original entry. Actually, yeah, $26,157 was my original, and I sold again at $26,162. So my average is $26,159. And now it's going to be a dollar per point move. So it's moved 8, 9, 10 points against me. And again, this is only $300, $360 of margin. So now I'm in 3. So now I just used like $1,000 margin. And you could just keep doing this all day. Well, you don't want to do it all day because you will eventually run out of margin. I'm short 4. And my average now is $26,164. And unless this is a big breakout, it will liable to come back and I'll be in profit, or at least break even. As you can see, my average keeps moving up as I keep triggering. So now I'm in 6. That's like $2,000 of margin. So I'm still not in as many as a YM, which is 10. I'd have to be in 10 contracts of this to have equal one contract of a YM. And that's a way to hedge, is if you were 10-to-1. But I'm going to save that for a different video. So now I need to change this to 6 if I wanted to get out of this at a, say at a, as it comes down, back down to moving average, which typically will. So now I'm in profit a little bit. It didn't hit my trigger. It did hit my trigger, but it didn't go past it. See, the market makers are messing with me now. Hit it, but it didn't take it. We're at 26,165, and my target is 26,164. There we go. Now, so there I am, up $26. I was up, what, $19? So again, you're not making a lot of money, but this is great exercise, great practice, because if you can't lose a lot, well, you can if you start increasing your number of contracts. Take that back. You can even if you don't increase your number of contracts, because the market does move quite a bit more than this is moving. We're only moving in a range from 26,125 to 26,180, which is really nothing. I mean, it's a Monday morning, so that's typical. It might not start moving in a direction until maybe 11 o'clock Central, another couple hours. Market really opens at 8:30 Central, 9:30 Eastern. Now, if I was using a YM for this, well, I would never go that many contracts in a YM. But if I was, I could be up $260. All right, so a little more technical. This is I'll draw trend lines through the tops here. On the 5-minute, we just came down to the 20 moving average, and now we're bouncing back up off of it. On the 15-minute, I'm going to move that over. On the 15-minute here, we're still in a pretty consistent uptrend trend there. And an increasing uptrend. You draw trend lines through the bottoms, and the trend lines are getting steeper. We did have a pullback on Friday afternoon. So now we are back going positive. We didn't go below the low at the open, and we went above the previous high, so we're still, like I said, in an uptrend. The only thing that is preventing me from really wanting to buy this is these stochastics are a little high. Stochastics and are in MACD, moving average, convergence, divergence. I have barely any volume on this right now. One thing I could mention while we're waiting for something is there's a website called Forex Factory that gives you, let's see if I can pull it up here on this computer. I use a couple computers, but because for whatever reason all the charts slow down this one computer if I try to do anything else on it. But I'm not doing any trading at the moment, so I'll see if I can pull Forex Factory. There we go. Bring it over to this screen. So it shows any potential market moves. It's good for Forex trading because it'll give you all the different, in Europe, Great Britain, Japan, Canada, Australia. So anyway, it'll give you a lot of information about the rest of the world. It does give you information about US dollar. So jobs opening, that was at 10 a.m. These are in Eastern time, so it's a relatively flat report right there. If it's green, it's positive. If it's red, it's negative, obviously. Sometimes, let me go to tomorrow. This is today. I can click on that, right-click, and here's tomorrow. And this tells you how much impact it should have on the market. For example, yellow is a low impact, red is a high impact, I think, and orange is a medium impact. So there's nothing tomorrow on the U.S. dollar. And Wednesday, if you trade, well, I don't see it. I don't know why. Oh, that still says tomorrow. Okay, Wednesday, crude oil inventories. If you trade crude oil, this says low impact, but that does have a high impact on crude oil right there at 10:30. So if you do trade crude oil, you have to remember that on 10:30 on Wednesdays is a report that moves the market. Here it shows a couple of CPI month over month and core CPI month over month reports that at the open will move the market. So anyway, forexfactory.com is a nice website to see what might move the market this week, and it's something you should do either early Monday morning, just go through the whole week, note things in your notebook that will have an impact on the market if you're trading commodities or futures. So we haven't had any movement really since I sold it at 26,164. So since this is such a boring market at the moment, I am going to just end this video and hope you got something out of it.